Welcome back to the Deep Dive. We're the place you come to get those high signal insights from, well, some pretty complex stuff. And today, we are really digging into XRP. You've probably heard it called the sleeping giant in crypto. It's been around, consolidating, fighting legal battles for years. But looking at the sources we've gathered, it seems like there's this very specific alignment happening right now. Regulatory things, institutional moves, bigger financial trends. It feels like a potential setup for a real structural shift for XRP. Maybe moving it beyond just being another token to becoming, like its fans argue, this essential tool for global payments.
Yeah, and our mission today is really to cut through the noise, forget the speculation for a bit and really focus hard on the data, the actual adoption curves we're seeing with institutions. Because when you see analysts using really strong language, like we looked at one analysis suggesting this market structure could genuinely create significant wealth.
Yeah.
You got to ask why. We need to understand the non-speculative reasons behind that. And this deep dive, it's zeroing in on that cold, hard problem XRP was built to fix. The multi-trillion-dollar friction stuck in the old way of doing global finance. This isn't really about meme coin hype. It's about cutting operational costs and speeding things up for the big financial players.
And the stakes are just
Unload.
massive, right? I mean, if you're talking about potentially replacing systems that handle over $100 trillion a year, well, the groundwork for that kind of disruption, it needs to be rock solid, especially, like you said, on the regulatory side. Okay, let's start unpacking that. Because historically, the big cloud hanging over XRP was always that huge question mark. Was it an unregistered security? So the real game changer, the thing that seems to have unlocked institutional confidence, was that SEC case outcome against Ripple Labs back in July 2023. Can you break down for us, why exactly that ruling was such a big deal?
It really was the cornerstone, the foundational moment for clarity. Before that ruling, you had every big bank, every institution's compliance team basically forced to assume the worst. They had to think, legally, XRP could be a security everywhere. Then the ruling from Judge Torres set this really crucial legal precedent and used the Howey test, and the court confirmed that XRP itself, the token, is not inherently a security. And even more specifically, it drew this vital line. When XRP is traded programmatically, on public crypto exchanges by regular people, that does not count as an investment contract. So the ruling kind of separated the initial sale of the asset, the institutional sales, which might have been unregistered, from the asset itself when it's just being traded later on secondary markets.
Okay, that sounds super nuanced, but clearly it's an incredibly important difference. Why does that specific part that secondary market sales aren't securities matter so much to these big regulated financial companies?
It just dissolves the biggest compliance barrier they had. Simple as that. Banks, payment processors, custody providers.
Yeah.
They live under intense regulatory scrutiny. They absolutely cannot risk touching an asset that a major regulator like the SEC might label an unregistered security. So the second the court clarified that XRP, traded on exchanges, is basically treated like a commodity or a currency, a non-security asset, well, the regulatory risk just plummeted.
Yep.
It essentially made the asset touchable for these institutions globally. And that's what kickstarts real institutional adoption. It's not like they suddenly discovered XRP. They knew the tech was good. They just weren't allowed to use it in this way until that ruling provided cover.
Right, so the compliance department's got the green light they needed. Okay, so are we actually seeing proof, like measurable evidence that the big money is responding to this clarity and starting to move in now?
Oh, absolutely. And it seems the quiet accumulation phase is underway. You can see it pretty clearly now on-chain data. We're seeing these substantial whale accumulation charts. That means wallets holding, millions of dollars worth of XRP have been steadily adding to their positions since that ruling during this consolidation phase. And really importantly, this accumulation is happening alongside significant outflows from exchanges.
Okay, explain that. What does it mean when a lot of an asset starts moving off exchanges? What does that signal?
It's kind of the classic sign of long-term holding. When retail traders are just speculating, flipping coins, they tend to leave their assets on the exchange. It's easier to trade quickly. But when serious players, often institutions, buy up a large amount and then move it into private cold storage wallets, that suggests they're not planning to sell anytime soon. It means they're likely taking a long-term strategic view, probably focused on the utility. They see it less as a trading chip and more as a reserve they might need for future operations. It signals confidence in Ripple's actual business model, kind of separate from the day-to-day swings of the broader crypto market.
So that quiet buying isn't just a theory, it's showing up in the data. But the core pitch is always utility, right? So how is Ripple's actual payment system, the on-demand liquidity or ODL, how is that actually growing in the real world?
Right, ODL is where the rubber meets the road. That's the commercial side, where XRP acts as that instant bridge currency between different fiat currencies. And it is expanding pretty rapidly, actually. Its main target is the foreign exchange, the FX market. ODL is now being actively used in real cross-border payment corridors, moving actual fiat value near instantly. The key thing to understand here, I think, is that while lots of other crypto projects focus on, say, high transaction volume in DeFi, Ripple is laser-focused on this specific pain point for banks. The estimated like $10 to $20 billion banks spend globally every year just on pre-funding liquidity for cross-border payments. That's money just sitting there. The cost-saving argument, enabled by ODL, is Ripple's primary weapon. Shifting from needing pre-funded accounts to having liquidity available instantly, that's a huge deal for a bank's balance sheet.
And this push into the market, it's worldwide, isn't it? They're not just focusing on one area.
Exactly, and that's critical. Ripple's expansion strategy seems very methodical. They're targeting regions where cross-border payments are historically clunky and expensive, and where the regulatory environment is becoming clearer. Our sources point to a lot of activity and partnerships across Asia, especially those high-volume remittance corridors. Think Japan with SBI or Southeast Asia with Franglo. Also the Middle East, which is digitizing its financial sector like crazy right now and becoming a real hub for fintech, and Europe, too. This deliberate strategic expansion shows they're trying to integrate with the existing complex financial system, not just trying to force everyone onto some completely new, isolated blockchain.
Okay, so when we talk about Ripple and XRP, it's easy to get the pieces mixed up sometimes. There's the company, the network, the actual token. Let's just clarify the different parts that work together to make this system so fast and efficient.
Yeah, it's crucial to see the layers. So first, you have RippleNet. Think of that as the enterprise-level blockchain payment network. It's the messaging and settlement layer specifically designed to connect the existing banks, the traditional financial institutions, or TradFi. It handles the framework for the transactions, the compliance aspects, making sure everything fits within the existing legal structures.
Okay, so RippleNet is the framework. And the engine driving it, the thing that makes it fast, is the ledger itself.
Precisely. The XRP ledger, or XRPL, that's the technical engine. And it's worth highlighting how it gets its speed. Yeah, it's not like Bitcoin with its energy-hungry proof of work. It's also different from many proof-of-stake systems. The XRPL uses this unique thing called a federated consensus mechanism. Basically, it relies on a specific trusted list of validators, they call it the unique node list, or UNL, to agree on transactions very quickly. Because it doesn't need to wait for miners all over the world or for staking validators everywhere to chime in, it can confirm transactions super fast. The key number everyone quotes is the settlement speed. The XRPL can settle a transaction in just like 3 to 5 seconds. Now, if you're a bank used to waiting 2 days or more for international settlements, that T+2 window, well, 3 to 5 seconds is revolutionary.
That speed is definitely impressive. But hang on, other blockchains, other layer ones, they're getting pretty fast too. What's the specific financial reason, the core pain point, that makes a big institution maybe choose XRP over another fast chain?
Okay, this gets us to the really critical point, reducing capital lockup. This is probably the biggest driver for institutions. Let's really dig into the money side here.
Yeah.
In the old way, the traditional correspondent banking system, if a bank wants to move money internationally, it has to keep these huge accounts pre-funded. They're called Nostro and Vostro accounts. They have to keep money parked in dozens of different currencies in banks all over the world, just in case they need to send money there.
Right. Let's make that real for people listening. It's like you personally having 50 different savings accounts in 50 different countries, each with foreign currency. Just sitting there doing nothing on the off chance you might need to send money to, say, Poland or Brazil that day. Most of that money is just stuck.
Exactly. That stuck money, that reserved idle capital, that's the capital lockup, it's effectively dead money from the bank's perspective. Can't be used for lending, can't be invested to make a profit. For a big global bank, this locked-up capital can easily add up to hundreds of millions, maybe even billions, in opportunity cost every year. So Ripple's ODL product, using XRP, offers instant liquidity on demand. A bank doesn't need the pre-funded account. It can take its local currency, say US dollars, instantly convert it to XRP, zap the XRP across the ledger in 5 seconds, and then instantly convert it back to the destination currency, maybe euros or yen. This drastically cuts down the need for all those huge pre-funded Nostro Vostro accounts. It's an operational change that saves them massive amounts of tangible capital cost.
Okay, wow. That sounds like more than just saving a few bucks on fees. It's like a fundamental change to their operations, freeing up potentially millions in capital they had tied up. But let me push back a bit here. What about competitors? Aren't other payment-focused blockchains like Stellar with XLM kind of targeting the same cross-border payment problems? They use similar tech, right? What edge does Ripple really have that Stellar or even, say, JP Morgan's own private blockchain efforts might lack?
That's a really important point. Gets right to the competitive landscape. The key difference seems to boil down to two main things: the legal clarity and the specific institutional integration strategy. Stellar is also fast, yes, efficient too, but doesn't quite have that formal U.S. court-validated regulatory clarity that the SEC ruling gave XRP specifically for secondary market sales. For these huge, super risk-averse regulated banks, that legal certainty we talked about earlier, that's like gold. It opens doors much faster. And second, Ripple Labs has, for years, focused almost obsessively on integrating deep within the existing financial world. They've targeted central banks, large government-related entities, the big established payment providers. Building that kind of entrenched network of global banking partners takes a long time, and it's really hard for competitors to just replicate quickly. Ripple's strategy seems to be integrating top-down with the regulated financial system.
That focus on the institutions makes sense. Once you prove the tech saves money and it's legally safe to use, well, then the game shifts from just cool tech to actually capturing the market. Okay, so moving from how it works to what they're aiming for. The sheer scale of the problem Ripple is trying to solve is just mind-boggling. They're really going after the foundation of how money moves globally.
Oh, yeah. They are explicitly targeting the massive estimated $156 trillion global payments market. I mean, just try to wrap your head around that number. The inefficiencies in how cross-border payments work today cost businesses and individuals hundreds of billions every single year. Slow settlement, complex paperwork, high fees from all the intermediaries. Ripple is basically making a direct structural attempt to make that whole process instant and almost free.
And this isn't just a plan on paper, right? We have actual examples of companies integrating this stuff and using it now. Exactly. You look at Santander Bank, they were an early adopter. They've used Ripple solutions for remittance payments, especially in Latin America. Then you've got SBI Group in Japan, a huge financial services company. They've been really key in rolling out Ripple's tech across Asia. And then there's Tranglo, another partner, which significantly expands Ripple's reach into those really high-volume, dynamic payment markets in Southeast Asia. These aren't just small pilot programs. These are serious, regulated financial institutions putting the technology to work for real, daily, high-value transactions because the math works out for them. The cost savings make sense.
And it seems like Ripple is doing more than just payments. They seem to be positioning themselves strategically, trying to be the link between the old financial world and the new one. That acquisition of Fortress Trust seemed like a big move in that direction. Yeah, the Fortress Trust acquisition was definitely a key strategic signal. It wasn't just about buying another company. It really showed Ripple's push to become that go-to regulated bridge between traditional finance TradFi and the emerging world of decentralized finance, DeFi, and digital assets generally. By buying a company with regulated trust and custody services, Ripple is basically building out the infrastructure so that regulated institutions can safely, legally, and compliantly hold and interact with digital assets. That could include things like CBDCs down the line or other tokenized assets. They're trying to make it safe for the big regulated money to enter the digital asset space, reducing the friction between the old and new systems.
Okay, this leads us right into that big, often repeated narrative about XRP, the idea that it could actually challenge, maybe even replace the old SWIFT network.
Right, the SWIFT competitor story keeps coming up because the comparison really highlights SWIFT's main weaknesses: cost, fragmented data, and especially time. SWIFT is essentially a messaging system. It tells banks that money is supposed to be coming, but it doesn't actually settle the payment itself. That settlement still relies on that slow, expensive correspondent banking system we talked about, often taking 2 to 5 days. Ripple, using XRP, is seen as this blockchain-native alternative that actually achieves the settlement almost instantly. Its advantages, the speed, the efficiency, the massive reduction in locked-up capital, make it, technologically speaking, a superior way to handle cross-border settlement compared to the decades-old SWIFT infrastructure.
So if that institutional adoption keeps picking up speed, driven by those cost savings we broke down earlier, that's where you get this idea of the default token hypothesis.
Precisely. If the major global banks and payment providers increasingly adopt RippleNet for the messaging layer and then rely on ODL using XRP for the actual instant liquidity, well, then XRP naturally becomes the sort of default neutral bridge asset for settling payments globally. It stops being just an optional speculative crypto asset and starts becoming an essential utility, like the rails that global money movement runs on. Analysts argue that this shift from optional asset to required utility is what could potentially drive those really aggressive long-term price predictions if that large-scale adoption actually happens.
Okay, so Ripple's potential success isn't just about their own tech and strategy. It seems like they're also riding some huge waves in global finance. Let's talk about this mandatory global move towards instant settlement systems. That sounds like the definition of a macro tailwind pushing them forward.
Yeah, this might be one of the most powerful, yet often overlooked, factors in play. The entire global financial system is undergoing this massive mandatory overhaul. They're moving towards instant settlement and much more modern data standards. And this global migration is largely happening under the banner of something called ISO 2022. Now, this isn't just a friendly suggestion for banks. It's becoming a global regulatory requirement for how financial messages are structured. Central banks all over the world are adopting it. The Fed in the US, the EU, even SWIFT itself is migrating.
We've definitely heard that term thrown around, ISO 2022. But what does being compliant with it actually mean in practice, like for moving money across borders? And why is Ripple being compliant such a big advantage?
Okay, so think of ISO 2022 as basically a huge upgrade to the language banks use to talk to each other about payments. It's like going from basic text messages to rich structured emails. It allows much richer, more detailed, structured data to travel along with the payment instruction itself. And this richer data translates into some key operational wins. Things like instant reconciliation between banks, fewer errors, much better tracking for anti-money laundering, and know your customer rules because the data trail is clearer, all of which saves time and huge amounts of compliance headache costs. Now here's Ripple's critical edge. The XRP ledger was apparently built to be natively ISO 2022 compliant from the get-go, most traditional banking systems. They have to spend billions of dollars and years of work trying to retrofit their old legacy systems to meet this new global standard. Ripple, meanwhile, is essentially ready to plug right into this modern financial system today. They can leverage that compliance advantage immediately.
That time-to-market advantage in a regulated world sounds like a huge competitive plus. Okay, now let's shift gears slightly to the future of money itself. Central bank digital currencies or CBDCs?
Right, and this brings up a really profound question for how the future global financial system works together. How does Ripple fit into this emerging CBDC landscape? Because central banks all over the world are exploring or even starting to implement their own digital currencies. But the big challenge is always going to be, how will all these different digital currencies, a digital yuan, a digital euro, a digital dollar, talk to each other? How will they transact smoothly? They're going to need some kind of interoperable settlement layer between them. And that layer needs to be fast, compliant, and probably neutral.
And the source that we looked at suggests Ripple is already actively building the tech for some of these central banks.
That's the really interesting finding. Ripple's tech stack is apparently being used right now in active CBDC pilot programs in several places. We're seeing programs in places like Hong Kong, exploring digital payment stuff, also Palau and Bhutan. These countries were reportedly building parts of their digital currency infrastructure directly using Ripple's private ledger technology. So Ripple is effectively demonstrating that its architecture, including the XRPL, can provide a flexible, scalable foundation for governments to issue and manage their own sovereign digital currencies. They're helping solve the back-end tech problem for these governments.
Wow, okay, so the implication there is pretty significant. If central banks are using Ripple's tech to issue their CBDCs, they'll still need a fast, compliant, neutral way to swap value between their CBDC and other CBDCs, or even back into the traditional payment systems.
Absolutely. The move towards CBDCs globally actually increases the demand for something exactly like XRP, an interoperable, fast, compliant settlement token. XRP is positioned, or trying to position itself, as that potential default neutral bridge, a way to swap values seamlessly between different CBDC systems and also between CBDCs and the existing fiat systems. In that kind of scenario, the demand for XRP's utility wouldn't be driven by retail speculation, but by the actual needs of central banks and governments for global interoperability. That could make its growth path much more stable and predictable.
Okay, so you put all these pieces together, the regulatory win, the deepening institutional use, these big macro trends converging, it naturally leads to some pretty bullish predictions from investors and analysts. Let's touch on some of the key factors that seem to be fueling that positive sentiment.
Well, one of the big ones, maybe more speculative, but definitely driving interest, is the persistent rumor mill around a potential Ripple Labs IPO. If the parent company, Ripple Labs, were to go public successfully, that would bring a huge amount of institutional validation to the whole ecosystem. It would almost force compliance departments everywhere to take the underlying utility asset, XRP, much more seriously. An IPO could indirectly benefit XRP holders by putting a more formal, mainstream valuation on the technology and exposing it to traditional capital markets.
Right, the IPO buzz is always there. And beyond the company structure itself, the XRP community has also been pretty vocal about the token supply, haven't they?
Yes, that's another factor. There's this growing demand from parts of the community for Ripple Labs to implement some kind of partial burn mechanism for the XRP that's still held in escrow. Ripple holds a very large amount of XRP in escrow, which gets released gradually over time to fund their operations and investments. Now, any kind of token burn is obviously speculative. It would need broad agreement. But the idea of potentially removing a chunk of that escrowed supply from circulation could fundamentally tighten the supply versus demand picture. Less available supply, combined with potentially rising institutional demand for utility, well, that's often seen as a powerful price catalyst.
And speaking of supply and demand, how does XRP's market structure stack up against other major cryptos right now?
That's interesting, too. When you look specifically at the liquid supply, the amount actually circulating and available for trading XRP apparently has one of the tighter supply-demand ratios among the top 10 or so cryptocurrencies. So you combine potentially strong utility demand from institutions wanting to cut those capital lockup costs with a relatively limited amount of XRP actually floating around on the market. Analysts suggest that kind of structure can be very conducive to significant price increases, assuming, of course, that the overall crypto market conditions are generally positive. And this leads right into those aggressive price targets you hear.
Which, based on this idea of accelerating institutional use and fitting into these new global standards, yeah, they get pretty high.
They do. We've seen projections from some respected analysts talking about long-term targets hitting $3, $5, even potentially $10 or more in the next major market upswing. But crucially, those targets are almost entirely based on the assumption that the volume of money moved using ODL by institutions continues to grow exponentially, that it successfully leverages those macro tailwinds like ISO 2022 and CBDC integration.
Okay, that's the super bullish case laid out. But this is the deep dive, so we absolutely need to balance that with a hard look at the risks. We need a solid reality check for anyone listening. What are the specific things, maybe less obvious ones, that could throw a wrench in this whole momentum narrative?
Right, we have to be really clear here. Even with its unique utility case, XRP is definitely not operating in a vacuum. It's not immune to the wider market forces.
So it still gets dragged around by the rest of the crypto market, basically.
Pretty much, yes. It remains highly correlated, statistically, to the overall crypto market sentiment, especially Bitcoin's price movements. Even if Ripple signs 100 new bank partnerships tomorrow, if the broader economy tanks, or if the crypto market enters another deep, long bear winter, or faces some big systemic crisis, XRP's price momentum is almost certainly going to stall out. Utility adoption might continue slowly, but negative market sentiment can just slam the brakes on everything price-wise.
Okay, correlation is a big one. What about competition? We touched on Stellar, JP Morgan. Is there a risk that maybe banks just decide to build their own internal systems and bypass needing a third-party bridge like XRP altogether?
That's definitely a key competitive risk. If Ripple's momentum in signing up new partners starts to slow down significantly, or if major global banks decide, hey, we'd rather just build our own closed-loop systems to talk to each other, think JPM Coin, or similar private bank-to-bank settlement networks, then the argument for needing a public, neutral bridge asset like XRP could weaken quite a bit. The whole investment thesis really hinges on RippleNet adoption continuing, and on the idea that a single, neutral, global asset like XRP is ultimately more efficient than trying to manage a whole messy patchwork of different proprietary bank coins. If banks manage to create effective settlement systems without XRP, that's a major threat.
Makes sense. And finally, we can't ignore the elephant in the room, the critique that's been around forever, centralization. The fact that Ripple Labs still controls so much of the supply and has influence over the network's validators.
Yeah, this is the sort of ideological sticking point that XRP just can't seem to shake. Ripple Labs does still control a very large chunk of the total XRP supply, held in that scheduled escrow. Now, they argue it's released predictably to fund growth in operations, not dumped randomly. But still, that level of control over the asset's distribution raises legitimate centralization concerns for people who really value pure decentralization above all else. And furthermore, while the XRPL consensus mechanism is fast, relying on that unique node list, those trusted validators approved by the ecosystem, means it does trade off some of the pure permissionless decentralization you see in Bitcoin. It sacrifices that for speed and, importantly,
for compliance. It's a trade-off designed specifically to appeal to institutions who actually prefer audited, stable, compliant systems. But that control is exactly what bothers parts of the core crypto community.
That trade-off really sums up the core tension, doesn't it? Speed and compliance, which institutions like, versus maximum decentralization, which purists value. So wrapping this section up, what's the final takeaway? The actionable advice for someone trying to navigate these really high hopes versus these very real risks.
I think the key is you absolutely have to manage your expectations based on the real utility growth, not just on speculative price charts or hype. The strongest case for XRP is tied to that long-term, slow, steady process of actually solving the inefficiencies in global finance. So focus on watching the real signals. Is ODL transaction volume actually growing? Are they signing up significant new institutional partners, especially in key regions like Europe or the Middle East? What's happening with global ISO 2022 adoption timelines? That's the important signal to track, not the noisy day-to-day price swings. Focus on the utility adoption curve.
That is such a critical distinction, separating the volatile price noise from the underlying structural growth story. And speaking of clarity and finding signal in the noise, if you found this deep dive helpful today, if our discussion helped you connect some of those complex dots between the SEC case, ISO 2022 global banking needs, then please do take just a second to engage with us. Subscribing to the channel, leaving a comment with your thoughts, hitting that like button, it genuinely helps support the deep dive. It boosts our visibility in the algorithm. And honestly, that's what lets us keep putting in the work to bring you this kind of in-depth, high signal analysis every week. We really appreciate it. Hashtag outro. All right, so to quickly recap our deep dive today, the potential perfect storm around XRP seems unprecedented, maybe. It looks like it's built on these three really solid pillars. First, that crucial regulatory clarity from the courts. Second, the deep and apparently expanding institutional integration through ODL and partnerships. And third, those powerful, unavoidable macro trends, like the global ISO 2022 upgrade and the push towards CBDCs.
Yeah, I agree. It feels like we've moved well beyond the early speculation stage. The conversation isn't really if Ripple's technology can do what it claims anymore. It's more about how quickly its compliance edge and its cost-saving potential can actually penetrate and start replacing parts of that old, slow, expensive global financial plumbing.
So we'll leave you with one final thought to chew on, something that builds on the just massive scale of the potential transformation we've talked about today.
If, and it's still an if, but if XRP does manage to establish itself as that kind of mandatory default liquidity tool for settling major cross-border payments between big economies, could it create a level of financial interoperability that's so seamless, so instant, that it fundamentally changes the actual velocity of money, not just making individual payments faster, but potentially accelerating the entire flow of the global economy itself? That's the true potential scale of the structural change Ripple seems to be aiming for. Something to think about.